Hi, this is James Shug with Westpac London's end of day report for Friday the 5th of October. Well, it was a positive day on equity markets today with sentiment pretty upbeat even ahead of the release of the American jobs report or non-farm payrolls for the month of September. The gain that payrolls delivered, 114,000, was just in line with the consensus and in fact our forecast of 110,000. But the market took some heart from the lower unemployment rate, which fell from 8.1 to 7.8%, largely because of an outsized 873,000 increase in the separate household survey of jobs. So there's two measures of employment. The payroll measure, which is a survey of industries, of businesses, rose by 114,000, but the household survey, after two declines in July and August, showed a rise of 873,000. Much more volatile series, that one. Back revisions added another 86,000 to the payroll series, so the 3-month average jobs pace through the third quarter on the payrolls measure was 146,000, up from 67,000 through the second quarter, the average monthly gain in the second quarter. Some of the detail was good, as well as the lower unemployment rate. We had a 0.3% rise in hourly earnings and a 0.4% rise in hours worked, which will support incomes growth in the September measures that will be released in the next few weeks or so. The industry detail showed factory jobs down for 2 months running, but apart from that, most industries showed gains except for temping and information, the information sector, where there were just very slight losses. Canadian jobs up 52,000 in September. That followed a 34,000 rise in August, but a 30,000 fall in July. The quarterly average jobs growth for Canada actually has slowed from 27,000 in the first quarter to 24,000 in the second, and 19,000 monthly average through the third quarter. The jobless rate rose from 7.3 to 7.4% in Canada. We had German factory orders out. They fell 1.3% in August, driven by a flat foreign orders, but a 3% fall on the domestic component. So that was the main economic news of the day. The jobs report was well received, mainly because of the lower unemployment rate and some of the positive detail. And that helped European markets to close higher. The FTSE in London, just ahead of the close, up 0.7%. The French market up 1.6%, the German market up 1.2%, Spanish market up 1.8%, and the Italian market up 2.4% today. The Dow in the US up about 1/3%. This is just coming up to 5 o'clock in London. The broader S&P measure up 0.4% today. In commodity markets, oil's been very jittery in the last few days, up 4% on Wednesday, down 4 on Wednesday, up 4 yesterday. Back down another 2.3% to 2.5% today. It's at $89.42 a barrel. So supply issues and the Syrian-Turkish tensions, the factors sort of pushing the oil price around. Gold down 2/3% today. It's $1,784 an ounce. Copper price is flat, 378 cents a pound. The Aussie dollar is a funny one. It's at 1.021 at the moment. In the last hour, it's fallen more than half a cent from 1.027. Difficult to sort of pinpoint a reason. End of week selling, profit taking perhaps. No obvious trigger in terms of equity market weakness or commodity weakness that would have driven that. So it's a technical story rather than something fundamentally driven. We've got the Reserve Bank Governor Stevens. He's giving testimony in Canberra on the Reserve Bank's monetary policy. That's on Monday, and that's about it for the day. So positive reaction to the US jobs numbers despite the weak headline, and equity markets mostly in good shape. Okay, I'll be back with more next week.